Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, December 18th, 2011. A lot of choppy action in the S&Ps right now, so we're going to continue to focus on intraday stuff and also on the support and resistance plays that I talked about in last week's video. And I'll be giving you an update shortly on a number of those stocks that were discussed. If you're not familiar with that list, you should go back to last week's video and check those out. S&Ps have been trading in a fashion of overlapping value. Remember, that means that each day, wherever 70% of the futures contracts traded, that is considered value, sort of the fat part of the bell curve distribution. And that's actually been overlapping for the last 3 trading days, from Wednesday, Thursday, and Friday. And even on Wednesday here, which would appear at first sight to be a big body down candle, most of the value of that day was really in this lower section, and you can see that the next day where the body was here, that was also the value, and it just overlapped. And again, the third day, so we're definitely in a very condensed range, and something explosive should happen shortly. So I'm looking for, I'm not going to call it either way, but if there's weakness on the open on Monday, it would give me a lot more confidence to probably short levels, knowing that there's a lot of value above us and we move a little bit lower. If the market surprises to the upside, then it'll be the other extreme. You'll generally see traders hitting the button to cover because their trade location in terms of where they're short from is going to be far below where the gap opened, and they'll have to probably drive the market higher off the open. So one of two scenarios is probably going to play out early this coming week. All right, that being said, let's go back to some of these plays that I was talking about from last week and give you an update. The first one I'm going to start with is BBG, because it's the only one actually that I've actually made a trade in since last week. I'm long BBG from 33.20, and what I wanted to show you is how to manage the trade once you get in it. So the idea here was to get into the trade right at or very close to a prior low. And you can see this low here is 33.04, so I went in at 33.20. Stock went a bit lower. I'm not stopped out yet. I'm going to show you right now why. I'm just leaving it kind of alone for a minute, and then I decide where the stop is once the stock settles out a little bit. So what I've done here is I've simply put in a average true range on the chart, which is calculated over 14 periods, and I can see that over the last 14 trading days, the average range from high to low of BBG is $1.69 roughly, right? You can see it right here in the bottom right of the chart. So what I've done is I've simply put a stop below the low point of the chart, which is here, which would be 32.36. You can see that in the bubble. Minus the $1.69 gives you the stop right here at this 30.69 level or whatever that is. I can't see, it's covered here by the bubble, but you get the picture. So you subtract the value of the ATR from wherever the low is, and then the target has to be double that, because you want to be like 2-to-1 risk reward. So from my entry, not from the low, but from my entry, I multiply this number by 2, and I put a 2 ATR target here at 36.61. All right, so that's how that works. So that's basically what I'm doing on the support and resistance plays. Now let's continue to go on with some of the other ones here. IPI, Intrepid Potash, you can see I've got a limit order waiting down there. And this is something also that I wanted to show you guys is what I do with these limit orders. Is basically I put limit order for a very small size. This is not going to be my size in the whole trade. But instead of setting alerts on some of these plays, what I do is I'd rather have a limit order for the minimum number of shares, 100, to get me into the trade. And that way, when I hear the bell go off that I'm actually in the trade, psychologically it means a lot more to me than if just an alert went off and said, oh, do you remember that IPI? Like, you were going to buy it when it came down to support, and then the bell goes off, but you're like in a day trade and you're busy with the ES or something, or you're on the phone, and you see what I'm saying? It's just completely different when all of a sudden the price goes down, hits your price and you're filled, and maybe even keeps going lower. It changes the whole thing psychologically. So try this if you can. Go in with limit order of very small size, and then what happens is once the trade gets filled, I immediately switch to an intraday chart, right? And I start looking at how to manage the trade. And this one's kind of far away thus far, and actually closed decently on Friday, so I don't know if I'm going to get filled, but I just leave it there. But I'll just let it get filled and then go into the intraday chart and manage the trade from there. Okay, let's look at some other ones here. Let's look at HBI was on that list, which is Haynes brand. Okay, this one was the one I talked about last week where I said I was actually happy that it didn't fill, and I think I had it a little bit too low, and yet since then the price has just really done nothing. Notice that there was a move down to the support area and then turned around. If I was in this one now, which I'm not, I would probably move the stop up tighter, more than less than the ATR right up to here, but honestly it hasn't really done much, so I'm going to be scrapping that one from the list. Amgen, I'm still interested to the short side. Notice that price probed very briefly up to the 61 where that resistance is. I'd like to be higher. I don't have the order in yet. As you can see, I'd like to put it early this week. I'll be setting it around 61.20 or so, around there. CCI was another one that we talked about. Crown Castle. Okay, this is still interested short or long, but I'm probably going to be looking to put the order up here, see where just over the 46 level is. ICE we talked about, Intercontinental. This is kind of a mixed bag and really kind of more in the middling range now, so I'll probably pass on it and delete it from the list. So you see what I do is I look at them week after week basically and just go through them and say, you know what, am I still interested? Yes, I might still put an order. No, I'll just take it off the list. So that's really the way to do it. NEE is looking good here, right? Continues to rise up into the resistant area and getting close. And again, I don't have the order yet, but I'll be looking to do that on Monday, and I'll put it probably 25 cents below this high area, probably a little more, maybe 30 to 40 cents under this high area. Okay? You can use the ATR as a gauge for how to do that. Notice that on average the stock moves around 93 cents a day of its range, high to low. Well, I can't figure that I'm going to hit it exactly, but I can take that number and cut it in half and maybe subtract that half from the high, and that puts me, roughly 50 cents or so underneath that high. So that's something to think about. The other one I'm looking at also is UN, and for instance, there's the limit order there for the small amount. And why, you probably ask yourself, why is the limit order there? Well, it's very simple. Go like this. You can see these two touch. I call this one dangling stuff. There's a number of different ways to draw a trend line. Let's extend it to the right. And I'm thinking we pass through the 31, knowing that there's strong support here at 30. So it's kind of like an area. And again, I'm going to let it get filled, and then I will switch to an intraday chart to be buying more stock on weakness around that support area. Okay, so there's an update on those trades. Let's just take one brief look at gold. Hopefully those of you that are following me on Twitter, and you should be, I specifically said that gold would not hold the 1600 probably. On my Twitter feed I sent you a picture early on the morning before the market opened on the day that gold broke the 1600, or broke the support level of the trend line rather, which was at the just over 1600 here, and actually went lower. You can see gold went as low as 1562, and since then has rallied up. I'm still maintaining that on the weekly chart, on the longer term, it is going to be the longer term trend line, which is more in line with the 1500 area, and you can put that there. See how that ties right in with that low there. If I extend it to the right, okay, this is it. It's at 1476 right now, and we'll probably move up to the 1500 area, and that's where I think that gold will be a stronger buy point at that area. Okay, so looking for that. Also, keep an eye on the euro this week. This is going to be interesting. Notice that the 6E, which is the euro futures, are coming into this support level here, and it is a low that was important because a higher high was made after that low. It's not as strong as this low probably, but it is a low to contend with. So it would be interesting to see if, and the euro hasn't been here for a while, so it would be interesting to see if there's a bounce point here right around that level in the 6E, or you can trade it also as an ETF FXE, which is a currency shares euro trust, which is ETF for the euro. So that's what I'm going to be watching for this week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I do wish you good trading, and as always, good night.